All right, good morning, everybody. This is the first official week. If you notice that we really didn't hear a lot of news, to be honest with you, about the unemployment report. At least I didn't in Europe. The big news while I was in Italy and was Greece, but mostly China, to be honest with you. Greece, the actual commentators were making comments, and I had to agree. What was the no vote about? The no vote was about we're not taking more sanctions and we're not doing any more austerity. We need growth. I think another other big news was exactly what China had tried to do to stop an incredible decline in the market. And if you're not familiar, there are several ETFs that we could take a look at, mainly GXC, but most people are familiar with the FXI ETF, and that's the iShares ETF. And as you can kind of see here, if we go over and examine this longer term, we have a market that almost looks like biotech, just straight up, and then had a correction. But I think what everyone was kind of concerned with is the pace of the decline. I mean, if you think about it, we had a 12% decline and a 6% decline, and then last week we had a 12% decline off that dead cat bounce. So it was like A, B, C, and potentially we have more to the D wave here, which would bring this ETF maybe into filling the gap at around 43 and 43.76. And if you think about it, what I wanted to point out to you, this would probably be an area of old resistance, could bring new support over time. And so I think a market that has an incredible amount of energy to the downside, and we did see some volume decline here, but I think over the next few days, this is still a fairly healthy trend. I mean, there was a much bigger volume decline back in October of last year relative to the price move and the volume decline for what we saw last week. So to be honest with you, I think China is shoring up um, they lowered interest rates. They bought shares. The government kind of pulled a U.S. Type of move. So they cut reserve ratios by 50 basis points. They lowered their interest rates by 25 basis points. And then they announced, I guess, that pension funds may invest in the Shanghai shares. So they really did, the Chinese government did everything they could to prop up prices. And even though they declined in light of all of that action, I think it might have been more like a margin call liquidation, and we'll probably see some support coming into the Chinese market. What does that do for us? I think it's still going to be a ripple effect, believe it or not. And there should be a ripple effect because what is happening in Greece, even though Greece is not a new story, it's an old story. But the problem in Greece is that they don't print the euro currency. They're at the behest of the euro economic community, and they can't print their own currency. So therefore, they cannot, now repeat, this is a very interesting concept. Um, Unlike Iceland, unlike other countries in the past where they have had problems with their economy, what they did is they lowered, keyword, lowered their reserve requirements, reducing the value of their own currency and making products and exports cheaper. How can Greece, if they do provide a service, if they do manufacture, lower the value of their currency if they're on the euro currency? So this is a significant problem. And so unlike when you had even what might not be really in the news is the fact that Norway is back into having problems. And so it's not just a situation that's Greece and just, the people shouting in the square. I think if the media really would do a better job of delivering information of what's happening in the world, it would have a little bit more maybe a scare in what's happening here at home, because there is, I think the key word is this a contagion problem. Manufacturing, when you look at the the way things happened here in the U.S. and when you look at things that are happening around the world, Hungary, Spain, Sweden, all over the world, we're not seeing a huge one article I read was looking at the Manufacturing Purchase Manager Index, and the majority of these numbers are lowered in the last month. And so, like, for example, the Netherlands, Poland, Sweden, Mexico, I can go on and on and on and on and on. It's not a very healthy situation overall. So I think we are going to see maybe a little bit continued weakness. And I've always watched, what happens in China. And, if we are a global interconnected market, and even though we did see a complete surge in China, I think it may be over accelerated to the upside. It still has to maybe find some value in this longer term monthly trend right here. This was an amazing volume spike. We're just seeing a correction and a strong longer term trend. And here's the longer term trend as I can define. So if you believe in a global economy and you believe in trends and if you believe in regression to the means, then by all stretch of accounts, with China at least, with the amount of liquidity infusion that they've put in, you're probably going to see the only downside I would suspect coming in here is going to be from margin call liquidation, trade adjustments, and that's the story with China right now. Now, had they not done what they did, and if they did not make it available for infusion of funds and capital and increased liquidity, I think we would have had a major problem. But as far as the global economy is concerned, there is some relative weakness and in some of the Eurozones. Matter of fact, when you look at the unemployment numbers, and that's one thing we will start to focus in on more so, is looking at the unemployment rates in the Eurozone. Eurozone unemployment rate right now, believe it or not, the EU unemployment rate is around 11.1%. Italy is 12.4, Germany 6.4. Why am I giving you this as soon as I came back from Europe? Well, if I could show you on our Genesis platform, this is nothing new to me. We've taken a look, and for many years, maybe you've heard me use the term rising tides floats all boats. In fact, several of our students, I had a memory lapse one month, and I couldn't remember the phrase. And thanks to my friends and colleagues in the trading room, someone had reminded me of that. I have created the relative strength and comparative analysis on all the major, the EWs as I call them, the E group, the EWI for Italy, EWQ for France, EWG Germany, and I've been watching the way we trade relative our markets to their markets. It's very important because we are an interconnected global economy. When the IMF asks the U.S. not to raise interest rates, there's a reason for it, and we are seeing a decline in business and global business expansion. And if you don't believe me when I say that, let's go over to a different platform here, or a different page, if I may, and let's take a look at the Australian dollar, for example. So the Aussie has had significant relative weakness, as you can see. It's just been, on a major downturn and continues to see continued weakness. Now, it has fallen into some support, just as you can see here. That is monthly pivot support. The looking at the commitment of traders, the specs are starting to get less short in the market here. To me, it's a moot point at this area. What I like to look at is the volume showing a massive convergence. This might have been, for at least the time being, an area where we will find some at least reprieve from the short side in the Aussie dollar now. All right. So another concept is what we looked at several weeks ago and traded off in this room while the world was, looking for the Japanese yen to continue to plunge. We also noted that we did have the same type of situation where the volume was starting to show some convergence. Again, this is a weekly chart, and this is the Japanese yen futures, not spot. So this is not like you'd see the quote in the cash market. This is the dollar yen, not yen dollar. So with that said, we were actually looking at a little bounce in here. We had beautiful technical confirmation, and we did see a pop in the market. Ironically, it is actually the Japanese economy that's improving along with the U.S. Market, and that's something that I think it's been, as someone had pointed out, the Japan's Tankan survey showed an increase, and where you're starting to see issues in other parts of the globe. So what's the point? Well, the point is simply this, that we have been on the forefront of being on the bullish side of the U.S. equity markets until about the late May, early June timeframe. And more importantly, when we did note that we were looking for a few things, maybe some sell-off in the Qs, also we noted that the Dow Jones Industrial Average, which was more of the defensive type stock where people look for that extra dividend yield, the large cap, but has exposure to Europe. And we noted that money was kind of flowing into the Russell growth story. But there were some funny things happening with this little growth story, and our technical analysis helped us to prepare in advance for that. And I have to say I'm pretty happy about that. Many of you in the room, even though we didn't get extremely aggressively short the market, we did have positions on. In fact, one of the positions that we noted was to be in the 124, 119 vertical bear put spreads in the IWM for the August expiration. And I was looking for between July and I think in mid-September a correction in the market, which between minimum of 5 to 8%, maybe as high as 19% if things do not improve relatively quickly, not just in Greece, but yet around the globe. So it's going to be more and more important to be watching global economic numbers. And that, to me, my friends, is the key to what is going to drive this market, especially if we have, listen carefully, especially if we have a lot of people highly leveraged in the market taking losses, not here, not in Europe, but hedge funds that had traded in China. If hedge funds had traded in maybe the emerging markets, if hedge funds, they try to find their best trade, these are things that we on the surface as retail traders do not have access to that type of information. How much money does the banks, the bank dealing desks, have exposure to losses abroad, and especially in China? And that is not just the contagion of Greece problem, that's the financial contagion problem of China's debacle. And so it had an impact on copper because they are using cash warehouse storage as a means of doing what? Margin call. And if the bank says, we don't want your stinking copper sitting in a warehouse, we will trade copper prices and sell the copper and hold the material as a hedge and force that price down. We're going to make profit on that. So there is a relatively interesting story behind this stock market debacle in China. I think we all need to have a little bit more respect for when it pertains to U.S. equity markets. After all, there had to have been a reason why we did not see Dow Jones component stocks, which have exposure. Most of these international conglomerate companies have exposure abroad. So with that said, I look at the technicals of the Russell here, and as it looked strongest, we talked about this divergence in the market. In fact, another technical tool, jokingly, and I'm going to insert analysis technique, and many of you were here when we did this, and I said, by the way, if we look at Bollinger Bands, I said they actually had intersected, something I normally do not do ever, but I said the Bollinger Band was intersecting against the monthly R1, if you guys remember that. And it was kind of an interesting concept that we said, listen, this is a kind of an area, and we kind of jumped the gun a little bit, and then we had weekly mentoring, and So this is a daily chart on the IWM. And I think what's interesting is how this market did get a significant breakdown both in the volume with the on-balance volume indicator, and this is really interesting. While in Italy, I was fortunate to catch up with some Americans and actually a portfolio manager from New York at a very large house. He does not do retail, and he was not even attuned to on-balance volume. And not really into technical analysis. Kind of interesting as a point, but could see the charts and said, yeah, the volume doesn't look bad. And I said, well, let me give you a little tip here. This is what I teach retail traders. The indexes are less frequently traded as a whole and more frequently traded via options. And so he says, yes, we hedge in options. Oh, great. So then therefore, if you're using the volume histogram, you're probably not doing yourself a service, and there's a freebie and something that I teach. But needless to say, when we look at that volume histogram, I still don't know what to read. The volume declined here. The rally continued to go up. The volume started to go up, and it's not really clear cut in here. But what I can see is this clear cut yellow line. We broke a trend. We started to really accelerate to the downside. And note that when we popped up over the last few days, intra-week last week, it hit the moving average rejection and is selling off. Now what the key is to see if there's going to be follow-through and to get maybe the Russell back down to the potential lows of May. And I want you to remember the month of May. I want you to, the month of May, those four little words. Remember the month of May, May's lows. Those would be better, just the lows, May's lows. When we look at May's lows, one thing that we don't see, just from a technical point of view, I don't have the volume selling off quite yet, but I do have, and the keyword I said yet, but I do have a potential decline with the advanced analysis, the AD comp lines. We actually broke below those May levels, all right? So to me, that may be giving us some insights that this could be a multiple major weekly decline. It's not going to end in 2 days. It's going to have more potential downside. Last week we generated a weekly sell signal, and look at the weekly advanced decline. It's probably not as healthy if you look at the OBV or if you look at this weekly volume histogram. This, to me, friends, is not a friendly picture right there. So let me go back real quick, and I'm going to look at the chart, if I may, on the FXI, which is another, remember the month of May's low. Remember what I just said, May's lows. So if I look at the May lows, you'll see, well, China's a kind of a different story, but we're going back to the April low. So the Chinese market is actually dipping into that April, took out the May area, and it was all in its own. So the question begs, can we get this? Is the market have more susceptible downside action? I would say I ain't picking the falling knife, that's for sure. It might have some sustainability for another, maybe a quick pop to the upside, but I think we want to be focused in on the FXI over time and watch to see if we can maybe get this thing into that 43 zone. And if we do see from a day-to-day basis the FXI start to decline a little bit more and base out on lighter OBV, I think it's going to be kind of like this, the game with the hot potato. It moves from China, then it comes over here, and then people need to liquidate, and the next thing you know, we'll be watching further declines in the U.S. equity markets. So what am I looking to do? Well, it's tough to jump in on a short position, and I will have to say from a teaching lesson, the E-mini S&Ps, as I was in overseas last week, and I saw the market go down, I go, please stay down. It's like, but the market doesn't open for another 6 hours, and of course, when you're up in Italy and you're looking at the futures open up at 55, and you're like, man, I'd like to cover some, but I can't. I have to wait till the open. It's just like, wait a week. wait a week and see what happens. Just like last night, where we saw the S&Ps open sharply lower on the exaggerated news. When we're trading in the ETFs, and I know a few of you in option mentoring, especially we talked about how we could utilize buying out of the money options, like a call if you're bullish and sell futures against it, kind of like a gamma scalp, or buying out of the money puts in the futures and buying futures for protection for dead cat bounces. And that is the technique that seems to have been working in the last week when we get these enormous, grand, substantial lower openings and then we rally a bit. But I think we're still looking at selling rallies. And so on rallies, what I might want to suggest is that in the room, we take a look at maybe switching, instead of using these ETF cash market for equity traders, you start focusing on E-mini S&P options, if we may, because I think over the next few weeks, we still have relative continued weakness, and then we can kind of trade around that with the futures on these overnight if you're interested in that type of plan. Now, when I run through some scans, it's hard-pressed for me to find any really decent. Scan number 1, buy signals. These are daily buys with weekly buy mode. And if you look at this, Alexion Pharmaceuticals, Discover, Dollar General, I mean, none of these stand out like I want to really invest in the long side up at these levels in any one of these names. Pulte Home Group, you know, we've, I think it's might be a little overstretched up in here, filling a gap. There's really nothing. Ralph Lauren. I think Ralph's going to do well over time, but we might be a little bit early there on Ralph Lauren. But I still like Ralph Lauren in the 130 handle. I think we have time. Looking at high closed dojis, I mean, Starbucks, I don't call after a 2-for-1 split and a stagnant scream to the upside a high closed doji. It doesn't meet its criteria. AT&T, the communication, you know, AT&T might have a little interesting story, and the telecoms might be interesting here. Longer term, you know, AT&T, I think European problems there could exist, so I'm not going to touch that for right now. I had 2 weekly high closed dojis, both Hospria, and of course the big news was the Humana and the potential buyout there. But looking at this market, I take a look at how many of the sell signals came through, and obviously we get a lot more quality sell signals. In fact, last week, just taking a look, there are no real new sell signals, and one of the reasons because everything's already in a sell mode. So for that, that's a kind of an interesting concept. What do we look at? I think what we're going to have to do, I mean, this is the trend status down. So looking at the market, most stocks are in a still negative trading mode right now, and I would have to say going into this week, we'll be looking for rallies. And if you're in this August 124, 119 IWM put spreads that we recommended and bought in the trading room, then stay with those, at least for right now. Or, you know, I think we probably want to be looking on a rally to add. I'm not convinced that the overall summer decline is done quite yet. So with that said, you know, maybe we can get, you know, test the waters one more time at the overnight low. And the overnight low in the S&Ps, like spend some time there. Remember the overnight low last Monday or Tuesday, I think it was right around where we're trading right now. And all we've done is come back to visit that low. So if we get a little bit more confirmation of the downside in here, I think that last night's low might be revisited. And then I'd say, you know, I got to start looking at my percentage changes and looking at those AD lines. But as you can see, looking at the S&P advanced decline on a weekly basis, we made newer lows. We took out the March lows, as I'm sharing with you. The same thing happened on the Qs, the same thing. I mean, all the way around, none of this is healthy. The advanced decline looks more sickly than prices, and typically one catches up with the other. So with that said, this week we've got an enormous, today is going to be kind of probably a slow morning, we have U.S. labor market conditions at 10 a.m. It was the 4th of July weekend. It was a Grateful Dead concert in Chicago. I'm not sure, I didn't hear a whole lot of news about that, and I'm sure there's going to be some slaggards, not that they are big financial whizzes controlling the markets at a Grateful Dead concert, but needless to say, I'm joking there. We definitely have a few big global stuff coming out. We've got Great Britain, the Bank of England coming out with their Bank of England announcement on Thursday. Friday, I think, we look at Janet Yellen speaking at 12 noon. We gotta want to hear what she has to say. And then China's consumer price index, that would be something I think would be one to pick up on. So from an international perspective, we have a bunch of stuff coming out, more so than say U.S. Announcements. And then we're going to prepare here for one of the hottest trading sessions of all, U.S. earnings. So it will be quite an interesting next couple of weeks in the marketplace. Tech giant Apple not really doing a whole lot. FCX, I think what our stop in place with looking at Freeport-McMoRan, this was a stock that had a huge run to the upside, nice little spike to the upside on decent volume. And when that market came back down to take out the lows, I think this is all inspired by China's margin call. We're going to keep our eyes next and peeled on that. But that's why if you take a look at what's happening with gold, for example, gold's not moving and copper's not moving. A lot of these material stocks are getting utilized as a margin call or as far as collateral in the market. So I'm a little concerned. I don't know if anyone's been hearing about this, if maybe over here, since I haven't been here in the last week or 4 days of trading. I didn't know if this was something was first and forefront that you've been hearing about, not just China. Everyone hears about Greece, but it's more China, and it's more Norway. And again, with Iceland, I want to just revisit this. How did they kind of get out of their slump? They lowered their interest rates. They devalued their currency so they could get exports more competitive to get their economy pumped up. Greece will not be able to do that if they're still on the euro. With that said, I don't think that we're done to the downside in the equity markets, and you have not just a U.S. equity market, but a global interconnected hedge fund world, banks that are stuck in bad trades around the globe, and they are in a frenzy. And it's not just China. Look at the currency dealings. Look what happened with Australia. And if we go through and take a look at if this is a global connected environment, then we should not be ignorant to what is happening around the globe. And so anyway, maybe that was a very productive trip I took, and to help share some of the insights there from more of a global situation. This company here, Twitter hasn't done anything. They need to kind of figure out how to monopolize their business, but still, the fact that it won't go down is showing some good relative strength. So whenever everything's said and done, we want to watch for pops back up in Twitter. Another company that I think is, as we've been talking about and waiting for, would have been Green Mountain Coffee Roasters. And Green Mountain Coffee Roasters, as I believe, still is sitting here not doing anything of a friendly value to traders. But I think we are finding, as we enter that seasonal sweet spot, we are kind of got a little bit more downside here when we get into the short-term weekly analysis. There we go. We find that around this week, around the 10th, we have a seasonal upside. So I still want to focus in on Green Mountain Coffee Roasters. It's departed a little too far from the means. Daily charts starting to lighten up on volume there. And this is one I think could maybe get back up into the minimum objective, would be back up to maybe 78. And then I think, 82 on a spike for whatever reason. I'm telling you, coffee is a necessity of life, especially when traveling on an international scale. So with that said, That concludes today's planning and scanning. I thought I would give more of a, here's what we are seeing on an international front, number one. Here's what's happening more so from an economic front globally, and yet here's also what's could and how we could be affected here in the U.S. and why we're seeing advanced decline analysis succumb to more declines. More stocks going down harder than the indexes are leading us to believe. Anyway, thank you all very much, and it's wonderful to be back, and we will get a recast out to you guys so that you can hear some of the numbers that we put out, and perhaps I'll put up a little writing with these factoids of the economic numbers from around the globe so we can give you a chance to do your own research and analysis and follow that type of information since we are, again, a global economy. Everyone, thank you all very much, and I hope everyone had a wonderful, safe 4th of July. Thank you all very much.